Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Saturday, June 24th, 2023. And welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's get to that. The first leveraged Bitcoin futures exchange-traded fund, or ETF, in the United States is set to launch on Tuesday. This announcement comes to us from Volatility Shares Companies. The U.S. Securities and Exchange Commission did not reject their application for the 2x Bitcoin Strategy ETF. This move is significant, as there is a growing interest in launching Bitcoin-focused ETFs. And I think a lot of that appetite could be coming from the fact that the SEC specifically did say that Bitcoin was not a security. I think that's going to drive Bitcoin adoption, especially on the institutional level, which might be why we're up above 31,000 today. Now, Stuart Barton is the Chief Investment Officer at Volatility Shares. BitX will not directly invest in Bitcoin. Instead, it aims to provide double the returns of a Bitcoin futures index to its investors on a daily basis. According to the prospectus, BitX seeks to profit from the price increases of Bitcoin futures contracts. While the SEC has approved a Bitcoin futures ETF in the past, it has yet to approve any spot funds. This week, several firms, including Invesco, WisdomTree, and BlackRock, filed for spot Bitcoin funds. We'll also be talking about Valkyrie's bid for a spot Bitcoin ETF in a bit. Now, the firm filed a Form 8A with the SEC on June 23rd, indicating that it's preparing to launch an investment vehicle that the regulator could consider a class of securities under its purview. As of now, the SEC has not explicitly denied the Volatility Shares application for the crypto investment vehicle. If approved, a leveraged Bitcoin futures ETF would be the first of its kind in the United States. Volatility's website stated that it planned to start trading on June 27th, but added that registration statement has not yet become effective. A separate filing for listing shares on the CBOE BZX exchange stated that neither the SEC nor the CFTC had, quote, approved or disapproved these securities or passed upon the accuracy or adequacy of this prospectus. So, fingers crossed. The SEC does have a pattern of denying many crypto-linked ETF applications. Now, speaking of Bitcoin ETFs, another country is also making moves in the space. Valkyrie Funds is a company already known for its Bitcoin Strategy ETF and Bitcoin Miners ETF. It is now setting its sights on launching a new Bitcoin ETF. This move was made official with a recent filing submitted to the US SEC. This new ETF, dubbed the Valkyrie Bitcoin Fund, will hold Bitcoin and aims to reflect the price of the performance of the CME CF Bitcoin Reference Rate New York variant. The company's plan is to list the shares of the fund on the NASDAQ exchange under the ticker BRRR, which is a nice reference to the money printer go brr meme. However, it's important to note that the SEC has yet to give its approval for a spot Bitcoin ETF. Ever. Valkyrie Funds is not alone in this race. This surge of interest in Bitcoin ETFs coincides with a significant increase in the price of the world's largest cryptocurrency by market cap. Over the past week, Bitcoin's price has risen by 16%. On Wednesday alone, it saw a 6.3% increase. This flurry of activity in the Bitcoin ETF space and the corresponding rise in Bitcoin's price highlights the growing interest and optimism in the potential of this digital currency, especially since it seems like it's going to be safe from the influence of Chair Gensler. As more companies like Valkyrie Funds joins the race, it will be interesting to see how the sector evolves and what its impact will be on the broader cryptocurrency market. Now, while some companies are making strides in the crypto world, others are facing regulatory hurdles. Belgium's top financial regulator ordered Binance to stop serving local customers immediately. The Financial Services and Markets Authority, or FSMA, said Binance was providing exchange services between virtual currencies and legal currencies, as well as custody wallet services from countries that are not members of the European Economic Area. Binance is already under regulatory scrutiny in a number of jurisdictions. They face allegations from the SEC that they violated securities laws and misled customers. The exchange has also been subject to an investigation by French authorities and has withdrawn from EEA markets such as the Netherlands and Cyprus due to those regulatory issues. The FSMA's order requires Binance to cease offering or providing any and all services in Belgium immediately. The regulator made it clear that people and firms governed in Belgium and not a member of the EEA cannot offer exchange services between virtual currencies and legal currencies or offer custody wallet services. Non-compliance could result in criminal consequences. The FSMA also revealed that Binance controls an estimated 19 countries outside of the EEA involved in its operations or technical support. These companies did not appear in the terms and conditions that Belgian users read when signing up for services. Despite several requests for information from Binance, the FSMA did not receive satisfactory answers identifying the services that these companies provide. In response, a Binance spokesperson expressed disappointment and said that the exchange is reviewing the details of the notice. They said Binance plans to continue working collaboratively with regulators in Belgium and across the globe to ensure compliance with its obligations. From the world of crypto exchanges, now let's turn to the views of a key figure in the European Central Bank. Fabio Panetta is a key figure in the European Central Bank. He expressed his concerns about the future of crypto. He believes that the inherent volatility and some features of blockchain technology render digital assets as nothing more than a tool for gambling. Panetta shared these views during a panel at the Bank for International Settlements annual conference on June 23rd. So, a party for central bankers about central banks. That's the lens through which Panetta was viewing things when he claimed the perception of cryptocurrencies as a solid store of value started to fade in late 2021 and continued to fade into 2022. That's the period of time when the total market cap of these digital assets plummeted by over $1 trillion. The ECB executive emphasized the highly volatile nature of cryptocurrencies, suggesting that they are more akin to gambling than a reliable form of finance. He argues that, due to their limitations, cryptocurrencies have not evolved into an innovative and robust financial system. Instead, they have transformed into a harmful system. Panetta further explained that the crypto ecosystem is plagued with market failures and negative externalities. He warned that, without appropriate regulatory safeguards, the market is likely to face more disruptions. The ECB official also cautioned policymakers against supporting an industry that, in his view, has not produced any societal benefits. He noted that the crypto industry is increasingly trying to integrate into the traditional financial system. This is done to gain legitimacy and to leverage the existing system. Editors note, with companies like BlackRock trying to get into the crypto markets, it seems like Panetta has that backwards. It's more like TradFi is trying to invade crypto. Now, Panetta also expressed his skepticism about the security, scalability, and decentralization of crypto transactions. He believes that these goals are unattainable. He also criticized the immutability of blockchains. See, it's his feeling that it's a drawback because transactions can't be reversed. Another editor's note, so they should not be reversed. Issue a correction. Don't hide mistakes, don't hide transactions. He referenced the collapse of FTX and a recent lawsuit filed by the SEC against Binance as examples of the fundamental flaws in the crypto ecosystem. The official reminded crypto enthusiasts that new technology does not eliminate financial risk. Despite his criticisms, Panetta has supported some aspects of the ECB's plans for a CBDC, which the central bank is currently researching. He has also suggested banning crypto assets that have a significant ecological footprint as a way to mitigate environmental risks. Despite these concerns, some regions are taking steps to regulate and incorporate crypto into their financial systems. Following the bankruptcy of FTX, Julia Liang-Feng Yi stressed the importance of incorporating virtual assets into the regulatory framework. She's the CEO of Hong Kong's Securities and Futures Commission. She views crypto trading as a crucial part of the virtual asset ecosystem. She explained that a new licensing system for virtual asset providers has been introduced to protect investors while acknowledging the risks faced by financial institutions. She believes that the only way to encourage innovation and to rebuild market trust after FTX is to integrate virtual asset providers into the regulatory system. In response to the FTX crisis, Hong Kong has taken steps to reduce regulatory risks associated with the centralized exchanges. About a month after FTX's collapse, Hong Kong's Legislative Council included virtual asset service providers in the same legislation that regulates traditional financial institutions. The new regulations impose strict anti-money laundering guidelines and investor protection laws on virtual exchanges that wish to operate in Hong Kong. Additionally, a new licensing scheme has been launched, allowing retail investors to trade in virtual assets. This is a significant change from the previous policy that limited digital asset trading to professional traders and investors with at least $1 million in liquid assets. Leong highlighted that Hong Kong's cryptocurrency licensing scheme is an excellent example of China's one country, two systems policy. While cryptocurrencies have been banned in mainland China since 2021, Hong Kong has taken a different approach by fostering a friendly environment for crypto businesses. Over the past year, more than 150 Web3 companies have set up operations in Hong Kong's Cyberport. Cyberport is a digital hub created by the local government to encourage innovation. This increase was triggered by the government's allocation of 50 million won to expedite the development of Web3. Now, let's look at how AI is being used to understand and interpret the source code of specific contract addresses. Etherscan recently introduced a new tool called Code Reader. This tool is designed to use artificial intelligence to access and interpret the source code of a specific contract address. The way it works is simple. The user provides a prompt. Code Reader responds using OpenAI's language model, offering insights into the contract's source code files. To use Code Reader, you need a valid OpenAI API key and enough OpenAI usage left. It is important to note that this tool does not store your API keys. The potential applications for Code Reader are wide-ranging. It can help users gain a deeper understanding of contracts code through AI-generated explanations. It can also provide comprehensive lists of smart contract functions related to Ethereum data, and it can help users understand how the underlying contract interacts with decentralized applications. Another feature of Code Reader is that once the contract files are retrieved, the user can select a specific source code file to read through. Moreover, users have the option to modify the source code directly inside their user interface before sharing it with the AI. However, as we experience the AI boom, some experts have raised concerns about the feasibility of current AI models. Foresight Ventures is a Singaporean venture capital firm, and they put out a report that suggests computing power resources will be the next major battlefield in the coming decade. As it stands, current prototypes face significant challenges. These challenges include complex data synchronization, network optimization, data privacy, and security concerns. The researchers at Foresight Ventures suggest that in most scenarios, small AI models are still a more feasible choice. They warn against overlooking these models too early in the rush to adopt large models. This is a crucial point to consider for those enthusiastic about the intersection of AI and cryptocurrency technologies. So, what happened? We kicked off with news of the first leveraged Bitcoin futures exchange-traded fund, set to launch in the United States on Tuesday. Volatility Shares Companies announced this after the SEC did not reject their 2x Bitcoin Strategy ETF application, marking a significant move in the growing interest in Bitcoin-focused ETFs. Next, we discussed Valkyrie Funds' recent filing with the SEC to launch a new Bitcoin ETF. Known for its Bitcoin Strategy ETF and Bitcoin Miners ETF, Valkyrie is now aiming to launch the Valkyrie Bitcoin Fund. This fund will hold Bitcoin and aims to reflect the performance of the CME-CF Bitcoin reference rate New York variant. The third story focused on Binance. Belgium's top financial regulator ordered the exchange to stop serving local customers immediately. This adds to the regulatory scrutiny Binance is currently under. We then turn to the views of Fabio Panetta. He is a key figure in the European Central Bank who expresses his concerns about the future of crypto. He believes that blockchain technology's inherent volatility and features render digital assets as nothing more than a tool for gambling. Our fifth story covered the regulatory changes in Hong Kong following the bankruptcy of FTX. The CEO of Hong Kong's Securities and Futures Commission stressed the importance of incorporating virtual assets into the regulatory framework to protect investors and to rebuild market trust. Then there was Etherscan's new tool, Code Reader. This tool is designed to use artificial intelligence to access and interpret the source code of a specific contract address. This tool highlights the intersection of AI and cryptocurrency technologies, offering users insights into contract source code files. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.